morning.
And we're back.
I beat you to it. How are you? I'm so excited you're still back. I thought you'd just show up for a day and then go away for another sabbatical for a month. I'm thrilled you're here.
Yeah, I'm thrilled that we're here as well. I'm glad to be back. It's April 15th.
What did you do to Tom was just in great spirits, and now he's very upset about the background.
I feel bad. He's so... Okay, I guess you're letting the cat out of the bag. I don't know. Sometimes it's like I say too much. Sometimes I get in trouble. But, okay, we're talking about it. Tom doesn't like the background. I feel bad because I'm the one, I think, who came up with the idea for the background.
See, but
I want to blame it on someone else.
Than that,
I can't really remember
because
who
Tom
came
liked
up for
the background when Glenn was sitting in the chair.
That's not true.
So,
I stupidly was like, oh, yeah, I think the production people, they're great. They were like, hey, do you want a background for, the Forex Focus? And I was like, oh, well, I really like Tom has the Tasty Live, the cherry, and it's a neon sign and everything. Can we just do that? Thinking like, that's simple enough. I'm not asking for too much because, of course, you can go down the road of like, well, let's get all the creative people at the business in a room and come up with a creative background.
This is this is a you and me problem.
Let's just do this.
Because, that looks good and you love his neon sign.
I thought I was paying homage, and he hates it.
Well, no, what he wants is the neon sign. So you and I have to go back to glass blowing class.
Wait, are you joking?
Partially.
Okay. Because I do have a neon. I do have a neon guy.
Did I tell you I took a glass blowing class?
No,
in college?
I didn't know that.
And
glass blowing in college.
Yeah,
what were you like making bongs? What was the idea there?
You had to have an art thing. So I went down there for like 2 days, and the second day, they got the long tube and the molten.
It looks
glass.
crazy. Yeah, it looks crazy.
These guys are all just stoned, and they're just coming out and they're blowing their thing, and I'm like, I'm going to end up with like a ball of molten glass stuck in my
when you
back.
say college and glass blowing, I think stoner culture is the first thing on the Family Feud board.
And that's what it never clicked with me on that. And I was just like, oh, that sounds interesting. You know me, I like to build stuff.
Yes.
This would be interesting to do. No, short of it being, again, it's August in New Orleans, so it's 98 degrees with 98% humidity.
I couldn't imagine.
You're in this basement with a blast furnace, and you can just smell the weed. I was like, no, this is going to
You have to be medicated just to be in that temperature
this is end really
environment.
Poorly. But if we went back and did our own, again, we're not going to be able, we have no budget to buy a neon sign. We don't live like the big kids. We're the DIY guys, so we're going to have to figure out how we make our own neon sign.
Okay. Or we can just get my conspiracy board from home as the background, because I've got a lot of pictures of Biden and Clinton and Trump and everybody. I've got it all connected.
Oh, and you got the string.
Yeah, and we can put that up.
People usually end up hanging themselves with that string. Do you have strong enough string?
What is your problem? But yeah, okay. He doesn't like the background.
We'll get on that.
We'll figure something else out. I thought it was good.
It absolutely works.
We'll take submissions as well. If anybody has.
Yeah, because we're gearing up for a big new product launch, and we want to get some special swag to go along with it.
Okay.
Especially for the first few people through the door, so to speak. So
I have some ideas. I don't know how PG. I don't know where we are on the spectrum of how edgy we can get.
You lost your swag privileges when you ordered high school gym shorts for...
First of all, that was a great idea. They were called oil shorts, and anybody who sold the new oil product that company had launched got oil shorts, and they were champion shorts, which I still have to this day, but I'm not allowed to wear outside.
Right,
because they're quite short.
The legs are about this long. they're what I wore 50 years ago in high school. So
okay,
we'll have to work on it. But you are an ideas guy, where I'm more execution, and you've told me that.
Well, I just like with stuff like this, it's always like, what we should do is put the tastyfx logo on a quarter zip, and it's like, great, we this company's been around for a year and we already have like 50 quarter zips.
No.
Like how many more of the
We're gonna
quarter
have to
zips
come up with
can we do?
We're going to do a couple of things. But
Well, we are entering summer, and tie-dye was very in fashion like 5 years ago. It has since gone out of fashion the last couple of years, and so I think it's a perfect time to bring tie-dye back in the fold. Contrarian play.
Reason number 2 why you're not in charge of swag anymore.
Come on, a beautiful,
I'm sorry.
a beautiful tie-dye. What else? The White Lotus people have brought, I forget what they call it, but like the short sleeve button down, colorful kind of floral shirt is back in fashion again. And again, it's spring, summertime.
The traditional
in the
Hawaiian
US.
shirt they used to call it.
But they don't call it a Hawaiian shirt. I forget what they call it. But yeah, similar to like a Tommy Bahama style
Right.
shirt. But now, of course, in 2025, it's like Tommy Bahama, but it's like a $300 shirt and like a designer makes it or something.
Okay. Keep going.
So that
We'll leave it up
how
to
many? What are your
everybody.
ideas? Your idea would be quarter zip.
No, my idea wouldn't be quarter zip. I was actually going to do coffee mugs.
Coffee
And
mugs.
it's kind of
Okay.
But I like the idea of if everybody gets their tastyfx coffee mug, and while they're trading, they send a picture of themselves in with their mug trading FX. Maybe we can enroll them in some sort of draw where send in your picture of yourself trading FX.
That's not bad, actually.
Yeah, we'll see.
I guess it doesn't have to be clothing. All right. Well, we'll think about it. We'll also
work
take
on it.
submissions.
Yes.
Let's work on
Anybody
this
out
market.
there who does do neon sign work, drop
I
me
actually do
drop me a line.
weirdly know a person in Chicago.
You got
who
a
does
neon
that.
sign guy?
Strange enough, yes.
Oh.
My buddy from college is whatever. We
So
all
you
are into
could-
weird things.
You
He's
could
very into
major in Michigan in either math, small animal husbandry, or neon signs. So those were the
Dude, you coming from the
bigger-
guy who at Tulane tried to major in glass blowing without you weren't even a stoner and you tried to major in glass blowing. So
I had
what
to
kind
get
of
an-
psycho
I had
does
one
that?
art elective. I had to do the art elective, and you know me, I
Oh,
can't
it's
draw.
August and it's 100 degrees out with the most humidity you could possibly have.
What can I
Let's
tell
go blow fire into glass.
Yes.
You're absolutely crazy. But let's get into these crazy markets. Actually, calmer than they've been.
Yeah.
Although a couple of interesting pieces. One, U.S. dollar trying to stage a little bit of a rally against both the euro and the Swiss franc. Although it's given back some ground here. Look at that sad rally
Yeah.
against the Swiss franc, bouncing off 81.5 all the way to 81.60. We'll monitor that, but more seriously, you are seeing this euro dollar get back down to the bottom part
Right.
of its range for the last, call it 2 trading days, going back to Friday afternoon, and that's only 113. But again, that's as much damage as they've been able to put into this market for the last 24 to 48 hours. We saw the same thing yesterday morning. They brought this market right down to 113 and then bounced it all the way back up to 113.5. Have not been able to take this euro lower than that price, like I say, for the last couple trading days. What say you as they try to put a little bit of a bid into USD against this euro going into Tuesday session?
For me, this sets up very straightforward. You've got a relatively stable pennant here, which statistically, again, let me. It doesn't work. So, okay. I was going to draw a line on the chart, but I can't get this to.
Well, we couldn't even see your lines anyways,
Right.
did we?
All right.
Are you on my chart? You're not on my chart.
Are you looking at Euro USD?
Yeah.
Yeah, but it's just, whatever. So I mean, I would just, if you wanted to draw, there's a triangle here, a big one, going across here. It's a pennant. When you see a flag, a little pennant like that, top end of a range, statistically it breaks out to the upside about 75% of the time. Do with that what you want. There's not a lot. Use just a, you can use just a trend line. Sure.
So you're getting at like something.
Well-
You and I don't know how to do this. Since
Here,
when are
look.
we drawing pennants? Oh, you are on my chart. Wow, look at that.
Okay.
So you're saying, yeah,
So,
we've
again, we've got about
essentially
3 points a
focused into
touch.
this range. Yeah.
Here, same thing.
Holy
we'll
smokes.
do this again.
This is
There's technicians out there. So you've got 1, 2, 3, 4, 5, 6 to the downside. You're starting to break through it a little bit. Here's the challenge with lots of things. This is why I don't like trading these things. When you get down to the very tight cone here we're at, it's going to break out of one side just by nature or run through
market
it.
has to go somewhere.
Yeah, when it gets this small, the confidence in the trend lines becomes less and less. Like I said, statistically, these upside pennants tend to continue to the upside when they violate the trend line. I don't know, but for me, the setup is you've got the downside clearly there, 113, 113, 15 and 113. It's plumbed a little bit under there. If you really think the dollar's going to, if we really think there's a change of sentiment in the dollar, I mean, getting back into the mid 115s to 118 is not far-fetched. I spent a lot of time trading it, in the high 128s and a lot of time trading it below par in my 42 years. But that trade sets up really easy. You're leaning into buying them long. You know where you're getting out. So you're getting out about 112 and a half, and you're looking for the upper end of the trend line. And there would be the case, if I was to buy them here, I'd look for that 113.50 to manage half, then see if it violates the trend to the upside, I might hold those a little bit longer. That's purely technical trading, but even if I took away the lines, again, you don't need the lines. You can just work off the levels themselves. So,
well, yeah, I in my, I guess, Philistine understanding of charts, just say it's bounced off 113 a couple of times. If you were looking to get long this market, if you saw the run from 108 to 115, and you said to yourself, "Man, I wanted to be long, I missed it," this has been the best price that you've gotten since that run up. Really, has been this 113. They haven't been able to take it any lower. But that being said, at some point, you would think there's two sides in this trade.
And the other side of this is the momentum guy who is looking for that. Traditionally now when markets trade to new territory, they haven't been in a couple of years. That was the first trade to 111, then the next trade to 115. We've done that. They don't just roll over and go back to 110. They sit for a while, and they kind of exhaust you trying to be short at the extreme. Because remember, if we move this over, this looks like just a one-way freight trade. Oh, this has to roll over. Well, it's given back a little bit, tried higher, given back, but it doesn't. They don't technically roll over. They don't roll over as quickly anymore. But if you're looking that long term, you think this whole move is overdone. A violation the first part of the day, anywhere up to the U.S. Open in equities, and I'm just picking a random time, 8:30. If we start to trade below 113, there's a decent short in there for that reversion back into the middle of that 111 to 113 range. Somewhere, you could look for 60, 70 pips on that easily, or even down to 112, if you think the market's going to roll over. And the harder part of that trade is if you sell it, you're going to have to be really disciplined about if you're wrong, because if it goes back into the congestion, you've got a lot of noise you got to sit through.
Sure.
So this is either it trades through, and this is one of the few times I use time as a decision maker. It trades through. If it keeps going, I'm with it. I'm trading the momentum. If not, I'm going to scratch it and move on.
The only other interesting,
both sides of the trade on this one.
The only other interesting piece here is, and it's so funny how these things.
Less interested in selling this one.
Again, it's so funny how the dynamics change so quickly in these major USD pairs, because this has been the pig for Aussie and Kiwi have been the worst trades. Really, I mean, if you want to go as far back as the last couple of years, but definitely the last couple of months, they got pounded.
With no relief.
April.
Even the fake rallies in November and December that were so short-lived in currencies were sold into dramatic.
Well, yeah, they had some of the least upside when the dollar was starting to give ground to start this year. They get pounded on, the volatility here in early April, the ties to China and everything else.
Liberation Day.
Yeah, risk, kind of considered a risk-on trade. But now, not only have they regained everything that they lost, but they're continuing to put in some strength here. This Kiwi to start this week is up a full percentage point here from where we were trading going back to last week here. This is Friday afternoon where we were below 58. Now we're above 59. And yeah, the only market that this week now is continuing to trend in one direction. You're seeing a little bit, I know it's not a lot, but a little bit of both sides in that dollar Swissy. You're seeing a little bit of both sides in that euro dollar.
Yes.
Sterling, whatever, I'll put that aside. Dollar yen, it's not like it traded down to 45 and then 40 and it's continuing to break here. This piece here with some of these commodity currencies are trend. They're not the strongest. Of course, they're not the strongest any time frame. You want to go back the last 2 weeks, the last month, the last several months. They are not the strongest. But the last 48 hours, they're the strongest. We'll see if it continues.
By far. And short-term action, this is one I'm not inclined to. You look at that V down and up in the Aussie and you think,
it's crazy.
Wow, that's 400 points. Who wouldn't be interested in leaning against that 64-cent level? Not me.
Yeah.
For the same thing is, if you're wrong, you're just going to have to pick some number to get out on. And I think even with this, structurally, there is a lot of room to normalize at the lower end of a long-term range, which is up to 70 cents for this currency versus a euro or a cable that has done a lot of that work.
Yeah, you look at the long-term chart where we could get back to.
This is what I love about FX, and this is where you have to think about, I can't buy this. I mean, it's up 400 points in the week. You
take out the first 2 weeks of April, and this is still a really low price.
Right. If you if you took out the print below 62, and we shouldn't because it's there, but it would be like, it's just grinding at the low end of the range.
Yeah.
It is. It had an explosive downside and correction, but this is one where I think there's energy to be had, possibly to normalize.
We'll see how it continues. Last thing before we get into a good segment that we'll hit in just a second, there is a fair amount of data coming out the next 24 hours or so.
Thursday, we've got ECB rate announcement. They're looking to cut by 25
Well, and
basis
tonight
points.
you have a ton of Chinese data that might affect some of those commodity currencies we were just looking at. Going into tomorrow, you have U.S. Retail sales. You have Bank of Canada meeting tomorrow, which we'll be able to talk about in the morning, as well as a Fed Chair Powell speech tomorrow afternoon, and then you have the ECB stuff all on Thursday. So I know in markets like this,
and then Friday is Good Friday, so
we'll see how much data matters in a market like this that's already organically so volatile. But man, that's a lot of data that hits on a lot of markets that are right now pretty vulnerable.
Interesting, absolutely.
But yeah, let's get into our segment.
What do you got for us
today? It'll be a fun one. I'll just bring up the slides here in a second.
The background looks fantastic.
Is it the best time to trade Forex, Pete?
It's always the best time to trade Forex. 252 days a year, even if you could get it on Christmas. Call me, I'll make you a price.
Compliance officer is has thrown his screen out the window.
Bashing his mouse on his table right now.
Well, this is always a matter of opinion. It depends on what you're trying to get done in any asset. Is it the best time to trade stocks? Well, do you just long stocks and hope that they go higher, because then the least volatile market is the best time for you to trade stocks?
Right.
If you're a day trader who's trying to take advantage, or a swing trader who's trying to take advantage of intraday or day-to-day large moves in Forex or stocks or whatever you trade, then a volatile environment tends to be the best one, and a volatile one being one that gives you the most prices per time frame, per hour, per day, per week, whatever time frame that you're actively trading in. You want as many different prices, as many different new levels that you're not used to seeing, whether you're trading momentum or you're trading contrarian against the trend. You just want big swings. And if that's what you're looking for, if you are an active trader, the Forex market is giving you some of its highest volatility in the last 5 years plus. I crunched the numbers here, Pete, and we're looking at realized volatility, actual volatility.
That's old school Aussie vol. We haven't seen Aussie Kiwi vol there traditionally it sits 2 to 3. It used to sit 2 to 3% above euro vol.
Okay, so probably in the
In normal
6, 7, 8% range.
Yeah,
Maybe getting up to 10.
And then we had that weird time where it was actually below euro vol,
Yeah.
which is really sub. But this is outsized vol.
The numbers themselves, if you're looking at the today column, are pretty high. We tend to see single-digit volatility pretty much across the U.S. dollar major pair board. Now that Aussie and Kiwi and some of these commodity currencies can get up to 10 or 11 or 12% volatility, even if we're not in a crazy market environment. But we haven't seen that in a long time. And now we're talking about 20% volatility in Aussie, which is, I mean, if you crunch the numbers on S&P 500 vol, they're not usually at 20%. Right. Of course, recently, they're well over 20%. If you're looking at VIX, we've seen 30% plus prints the last couple of weeks. But 20% in a major U.S. dollar Forex pair, very rarefied air, 17% for Kiwi. Interesting one here, and maybe the most abnormal on the board, Swiss franc vol is up to almost 17%, and that's actually the only major U.S. dollar pair that's higher than its pandemic highs in volatility. As you can see here, during the pandemic, the highs in volatility for these pairs, 24% in Aussie, 23% in Kiwi. So we're not there, but we're very close to there. And if you're looking at the Swiss franc trade, we're actually surpassing that volatility. So this is to say a very volatile environment, the most volatile one since the pandemic. And for some of these pairs, the Swiss franc there, a more volatile environment than the pandemic.
Absolutely.
And I want to go a little bit further with these numbers just to show you here, when we look at realized volatility rank, this is saying, okay, over the last year's worth of volatility data for these different pairs, where are we sitting in that range? And an RV rank of 99% or 100 tells you that right now is the most volatile time in the last year. And you can see that we're at that peak for almost all of these US dollar pairs, actually except for CAD, which if you'll remember, they kind of saw the highest vol that they've seen in the last year when the tariffs started in March. That was when Canada was really the focus of the Trump tariffs. And so 77%, it looks weak. It looks like, oh man, it's not that volatile, but still kind of keeping pace, at least, and still a volatile one.
They're all pegged at their highs. Yeah.
It's craziness here. And I want to go one step further, because now you might say, okay, well, Pete and Frank, it's nice that you've shown me all these volatility numbers, showing me that it is right now the most volatile that it's been the last year for a number of these markets, and for some of them even more volatile going back to the 2020 outset of the pandemic. I can't trade these numbers. I'm not trading variance swaps, right?
What does this give me?
Well, so you are trading the price action if you are day trading or swing trading these Forex pairs. And so what this translates to is standard deviations in all of these pairs. And what's a standard deviation? Well, it's the range that the recent data tells you the market has lived in 68% of the time. So a decent amount of confidence. And what a lot of people look at, it's what most options traders look at when they're looking at one standard deviation. Okay, I'm looking at the 16 delta. Of course, you could say, oh, well, I want greater confidence. And that might be a 2 standard deviation move, 95% confidence. That's the range that I want to trade. Well, it's rare that a market gets outside of that range. So a lot of traders look at 1 standard deviation, 68% confidence, because that's a healthy amount of, okay, that's the majority of the data, but it's still allowing for some outside movement, right? Because if you're trading the trend and you're saying, okay, I want to look at this market when it gets to, an outside level and trade it beyond that outside level, well, you have to have some occurrences of that market actually getting to that outside level. And so if you have a confidence interval of 100%, it's never getting beyond that. 68% is pretty much an industry standard, 1 standard deviation that a lot of people look at for trend followers, looking for, okay, it got to that boundary and now I want it to go outside. Or contrarian traders will look at that boundary of 78 points in Aussie and say, okay, well, when this market gets to 70 or 80 points up or down, I'm looking for it to revert back into that range. And you can see here, Pete, these 1 standard deviation moves are a lot healthier than they've been the last
in November,
year
we were
or two.
looking at stuff in the 30s, and I think euro ticked down to 28. So,
Euro dollar range closest to 100 points than we've been in so long,
which
at
is
82
great,
points.
This is a great metric for determining what's a normal day and start to determine, okay, this market's moved far enough, and you're using statistics. I mean, a 68% confidence level tells you you're going to be wrong 32% of the time.
Sure.
That's why we think about risk management. And again, good times to trade, wouldn't fall. And I think you make this great point. More unique price points give us more opportunity to decide where we want to get in, get out. Obviously, I was kidding when I said every day is a great day. It's all relative, but this is great if you can put context. Sure. As a trader, we didn't have any of this math. Mm-hmm. The hardest thing is when structure in the market changed, like what we've seen in the past 3 weeks, it took us a while to start to understand that by getting run over, because our expectations were, well, fading 40 points on either side of unchanged was always a great trade.
Sure.
And then it was like, they didn't even look as they blew by that.
Yeah.
Looking at these are great tools to let us start to make better decisions with the fact that the market's dynamic. Sometimes it gives you more, sometimes it gives you less.
And we'll be updating these constantly and coming to the show with them. But just as a last piece here, our friend Glenn put together a great graphic of what you can do on your charts to kind of look at, and this is dollar yen here, when this market has moved, in a given day or in a given number of a couple of hours, this 1 standard deviation move. You have all the numbers from our last slide. Now you can go to your charts and take a look. And this really is a interesting.
Nice tie-in
the last couple of days here in this dollar yen, we've seen the 125 point moves, but haven't really broken outside of that range. So great trade for contrarians. On either side of it. Yeah. But that'll do it for today's episode.
Take us out, my friend.
Coming up next, you've got Tom, Tony, and Vanetta. Stay tuned for them. Peace.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Woo! Get tasty, free market. Come on, you know we can't